The major indexes closing lower today after the U.S. announced plans to apply 10% tariffs on $200 billion worth of Chinese goods that come to this country. The move comes less than a week after a round of 25% tariffs from both the U.S. and China on $34 billion worth of goods each.
Joining us now on to how to discuss all of this on how this increasing trade tit for tat could impact the U.S. economy is Joshua Meltzer from the Brookings Institution and Anthony Chan from Chase. Gentlemen, it's good to have you both. Joshua, you first. How do you figure that this is all going to affect the economy? I mean, the bottom line is we don't even really know if this additional $200 billion is even going to go into effect or not, so it's kind of hard to game it out.
That's right, it is. There's going to be a process now where the government assesses the types of product that it's going to go into effect on. So that's going to take approximately a month or so we'll know about then. I think they probably are going to go into effect. And then we're going to see some real life impacts on the economy. This is a large amount, much larger than what we've seen so far.
It's a large amount, and it's really extensive. I mean, 200 pages worth, Anthony. Who knew we even import live eels, live trout, and live herring from China? How do you go line by line to figure out the consumer impact of all this?
Well, I think that it's quite clear that the consumer impact will be higher prices and there'll be some discomfort. But I am encouraged by the fact that the tariff rate is lower than rates that we've seen in the past, when we've certainly heard 25%, now we're going down to 10%. And keep in mind that there's still a period of transition where there is some public debate, and that gives you a window for possible negotiation.
Joshua, what's the end game? If we do have some negotiations with the Chinese, as Anthony suggests, how does it all end?
Look, it's a great question. It's going to have to end with China making some concessions to the United States. They've already offered to buy more energy and agriculture products, but that's clearly not going to be enough. The US concerns with cybersecurity, hacking, forms of subsidies to state-owned enterprises, but these are really hard reforms for China to make. In the past, they've promised to make some of these reforms, they haven't followed through. So even if they promise, what does that necessarily look like in practice? I think we're probably in for a very rough ride with China for a number of months now. I do expect these tariffs to go into effect. I think China will retaliate, and we'll see where we are after that.
Well, Anthony, I mean, the stated legal basis for these measures is this kind of investigation and findings of the administration about intellectual property violations and things like that. So it would seem that nominally should be the thing that changes if, in fact, this impasse is going to be broken. And it's hard to know how quickly that might happen, or really by what means China can satisfy anybody that they've done something on that front.
Well, Mike, I think there's no doubt that this is all part of a negotiation. The president has made it very clear that the end game is to have zero tariffs or reduce tariffs for all countries involved. So in the process, this is, I don't want to call it a kabuki dance, but it might be a kabuki dance where you get all the parties engaged, and then all of a sudden you get negotiations and things gets resolved. If you look at the market, you look at the S&P 500, it's still up 3.8%. So clearly investors are not completely unfazed or completely unnerved by this situation, because they're really still paying attention to the fundamentals. We're going to get 22% corporate profit growth on the S&P 500. We got one of the tightest labor markets. The Atlanta Fed now is telling us that we have 3.9% economic growth in the second quarter. So yes, if you get all these tariffs that have been proposed, and certainly the ones that have already been applied, yes, it could potentially reduce as much as 0.4% off real GDP this year. But clearly the momentum is there, and certainly the seeds for possible negotiation.
Yeah, we are starting from a pretty strong economy, I guess you could say.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.